Welcome back to the Finance Corner. So today is Thursday, September 12th, and it is 9:25 in the morning, just before market open. And we have some data releases today. We had some really nice data releases. So we actually got the PPI data this morning, the month-over-month and year-over-year data. No, sorry, core CPI, core PPI, and the PPI month-over-month. And we also got unemployment claims. So it looks like previous unemployment was 228. They expected it to go down, but it actually went up. And then we have PPI data, actually a positive number. Same thing with the core, which came from negative. So core CPI is supposed to be, these numbers are supposed to be better than or good for the currency, and then looks like actual less than forecast is good for currency, so more means this should be essentially bearish news though. We should get a bullish dollar, according to the data at least. Let's see what's actually been happening. So we've been getting a bearish dollar. Interesting. Interesting. Well, we'll go into the technical analysis for the day. I just want to cover some new stuff going on, basically. So let's see. Oh, we also had the debate today, or not today, this week, which is a pretty big deal, and a lot of people are really on the fence when it comes to who to choose to vote for. They're saying that it's about 50-50 chance that either or can get elected as president. Let me see. Wrong tab. Wrong tab. I want to see if I could find the polls. Not me lagging. Okay, we can watch some key moments of the presidential debate here. It's actually pretty interesting. I think that and then we'll get right into the markets because the market's about to open. Yeah, they actually got their handshake going on. turn on the AC. I feel like this, like, why was she laughing at this part? Like, trying to make it seem like it's not true. Like, I've seen the videos where people in Springfield, Ohio, are like literally complaining about and filing complaints about this exact thing. And here we go, like, she's actually making light of it because she's just laughing. And I don't like, even if you think it's not true, it's like, why would you just laugh at that? I don't know. I think the key word is like credible reports. Like, how do you find a credible report of someone's dog being attacked? Like, if someone says their dog was attacked and they tell the news outlet, and then they tell this guy, and they're just like, no, that's not credible enough. Like, what do you mean we found no credible reports of people's dogs being eaten? Why do you need a credible report? Yeah, that was just a quick clip of what we had going on in the presidential debate. It was actually pretty good. I think that overall Kamala really did do a decent job compared to Biden in earlier months. I think it was in like August something or June, and yeah, she did a much better job in carrying herself in the debate. So I'll give her hats off to that. But so as far as the making the race of the presidential election like closer, we really don't know because that debate, it was supposed to be kind of like a telltale sign of who's going to be most likely to go into office. But with how close it was, I don't know, man. I overall think that Trump won the debate, but I don't know, man. All right, let's talk about the markets. Let's talk about the markets. So yesterday we had a huge reversal candle, and this is due to the fact that we had CPI. So CPI data came in cool. Let me see, where is it? Or pretty much in line with expectations. And oh no, so it was the year-over-year number. But yeah, exactly. It came in line with expectations. So the previous number was 2.9, and now it came down. They forecasted it to 2.5, and it actually came down to 2.5%. So that's CPI, and then the core CPI had a slight increase. But really, the year-over-year number is what was most important, and they liked how that actually is in line with expectations. So if based on the price action we got yesterday, the market really liked that news data, right? So when we also factor in today's data with PPI, it doesn't look like the data itself. The release of the data itself is not necessarily the most bullish, but we just have to see how the price action rate responds at this point. So we actually have market open now. I want to see what is going to go on. Let's let's. I like looking at all three of the indexes. So let's see. Get our handy dandy indicator on. The only two indicators that I need: EMA and London and New York Open. Everything else is just based on price action. So as you can see here, we actually have a nice sweep of liquidity here. Nice sweep of short-term low resistance highs, sorry. And that's on the S&P. So let's see the Dow Jones kind of have a similar pattern here, and the Nasdaq is just straight up trending, no liquidity sweep, unless you consider this one down here. But to me, it kind of looks like we formed equal lows. I'm curious about how the day is gonna close. Sorry, my nose itched. But I'm curious about how the day is gonna close, because with how yesterday traded, and we did a huge reversal. We did a huge reversal like we did yesterday. I'm curious to see if we're gonna get some type of move back into the EMA, maybe fill in some of the imbalance, and then leave a wick and go higher. But I think that for now, it does pay to be a bull. It does pay to be a bull. But some areas that we can potentially see a pullback to is like right here on this daily institutional candle. And let's see. We have a similar pattern on all three of them. Yep, similar pattern on all three. So now it's just about seeing which one is going to be the stronger asset to actually take us back into. I'm sorry. The thing is it's gonna be about seeing how much of this imbalance are we actually gonna fill back in, and we also want to pay attention to the strength of these assets. So as we see, so here's an example of relative strength and why it's very important. We see that if we compare this week's price action, essentially from Friday until the low now, we actually went lower with yesterday's move on CPI, and this is on US 30, right? US 30 a little bit trading slightly lower. Not that it's trading lower, it made a lower wick. Versus when we look at S&P, we didn't actually break structure compared to Friday's close. You know, we're actually a little bit higher, or we actually are in line with that bullish structure. And it's the same thing, I think, with NAS. But if you see with NAS, the slope is actually a little bit more steep. So if anything, relative strength analysis shows us that on the daily time frame, Nasdaq is the most bullish asset. So how can we use this information? Well, now that we did an analysis on the daily time frame, now we can zoom in onto a smaller time frame. And I'm really expecting a pullback. Really, I am expecting a pullback. I'm not sure exactly where it could pull back to, but I want to see where it's gonna, like, how low is it actually gonna get before we start buying again. So just as an example, I believe maybe we can get back into this EMA, and we can like tap the EMA at the very least, or even go a little bit lower into the daily institutional candle. But I do believe, since the day just started, it's 9:40 right now, I don't want to go and actually take any buy positions right now. You know, it's going to be about positioning ourselves with big money. And big money, I'm pretty sure they're going to want to have their orders in here. Now, I could be wrong. I could be completely wrong. But I just think that based off just the structure on the 4 hour and the daily, I don't think that we can. I'm going to be looking for us to get lower, basically. Let me see something, actually. Take rid of this line. I want to see if you're on a flat bottom. Okay. If we were on a flat bottom candle, that might be a signal that we can be just going higher, and we are not going to get a pullback actually. But let me see, does that flat bottom candle exist on any of them? Not necessarily, because when you see flat bottom candles, that's how you know that like that is going to be the like high of the day essentially. But that's only on the daily chart. So you see, for example, here this is a good example of a flat top candle. You can see the top is completely flat, meaning that as soon as the day opened, we just sold. We just sold and sold and sold. So that's how you know that this like this day, that is the high of the day. If it's a flat top candle. So basically I'm looking to see if it's the opposite on here, but it's actually not. We had a flat bottom candle, but we're not there. So it looks like we're actually getting some selling off now. Sorry. It feels like there's fucking spider crawling on me or some shit. Alright, anyways. We're actually getting some selling off now. So that is very good. Let's see if everything else is selling off. Because really, again, the question is going to be about how low are we going to go? How low we gonna go? How low we gonna go? And then, once price gets back into our area of interest, we can then focus on taking positions to the upside. Actually, I'll talk about a position I did take on gold in the pre-market. You can see here, it was a very small position. So you see, I took a buy position shortly after the news release on gold, and so yeah, we got out definitely a little bit early. You see, I got out 25.27. We are currently at 25.47, so that's a whole 2,000 points that I kind of missed out on, but it's okay. I want to talk about the reason why on gold that I was bullish though. I just wasn't sure how long to hold it. So on this daily chart, that is essentially the reason why I was bullish, because we had this equal highs here in the form of liquidity, and it's been there for a very long time. Past couple of weeks, since August, we just reached this point of resistance and we just couldn't get past it. So now, today, that we actually had a catalyst, being the news event, to go higher, that's basically why I was willing to take that trade. That is essentially very simple why I was able to take that trade. I was looking at the 1 hour chart, and then when I seen we're already starting to have some bullishness, by the time that 8:30 came around, I was like, all right, maybe we can actually get some buys. The only thing that I should have paid really attention to is the fact that we actually have a lot of smart money concepts in here. So we actually see the imbalance being filled and then breaking higher. Classic example of smart money. Classic example of smart money. So I bought around 8:30 around here, and I closed right here. So I actually could have held it. Definitely could have held it. But see, the issue with me is I was on a smaller time frame. So I was just focused on, I think I was on the 1 minute. Where was it? So yeah, so back here, I seen that we had a small sweep of liquidity. So I was like, that's enough. There we go, right here. You see how we just barely breached that? And so I entered on this candle here and essentially just wrote it up. Just wrote it up. But I think on this slight pullback here is when I got out. But even if I was still on this 1 minute chart, we have our resistance here, which acts as support here. So that could have been the re-entry. But I actually wasn't looking for that. Just wasn't looking for it. So, but gold is bullish as fuck. Gold is bullish as fuck. We just have to see how or if we can position ourselves to enter it. But I don't think that we can, because this thing is just going. This thing is just going. All right, so we're actually getting our pullback though on the indexes, except for Nas. Nas is doing its own thing. But let's take a look at the dollar. Um, yeah, let's take a look at the dollar first. So again, we've been having like we've been having a bearishness on the dollar, but I've really been anticipating a reversal. As we can see here, I'm, excuse me, this could be potentially lows for the month, potentially. Now, I'm not saying that it is, but just bear with me as we walk through this weekly chart analysis. So back here we have our low of the year, the last week of the year, and we just tested that low recently in the past couple of weeks, and we actually had a huge reaction. So based off the reaction in that area, that's what tells me that we might spend some time in this area, because once we already swept the liquidity, took out everybody's orders, now it's just a matter of building up energy, building up, you know, a reason for the price to move out of the zone. So if we take into consideration the daily structure now, I kind of have a Wyckoff pattern. It's what's beginning to be a Wyckoff pattern forming here. And I'm going to finish up my video on Wyckoff very soon. And I'll put it out onto the Patreon so you can follow along with what I'm about to talk about. But essentially, it looks very much like a Wyckoff pattern, which is why I say that we might consolidate in this area for a while. So we have our selling climax, automatic rally, secondary test, right? And I'm not gonna label everything yet, because just because it's still in the forming, like it's still forming our structure. But this is essentially our from here. This is our phase A. So now we're just in phase B. So from here, it's just about analyzing where the market tips its hand. Where is the market going to show that it wants to go? And my personal bias is bullish, just because of the previous liquidity that we had and how we swept it, how we're reacting, and just the fact that I think the market is due for a correction. And especially since it falls in line with seasonality in September, they say that September is really the weakest month in the year. So if the stock markets are weak and the stock market's going to be losing valuation, there has to be inflows into the dollar, which is going to make the dollar rise, right? So that's kind of just the macro analysis of the dollar for now. So I think we are just in this consolidation pattern. We might get some more zigzags and some more price action within this area, because really it's just going to be all about identifying the extreme points within this area. Right now, especially the fact that it is not showing us that it wants to leave this area yet. Like maybe the only scenario that could make sense if it wants to break this area now is if we bounce off of this EMA here, and then we can continue higher. Because with yesterday's price action, we did fill in this imbalance here. But that's why I think that this is a Wyckoff pattern, because I don't think that we're actually just going to break out yet, especially with the fact that today specifically might just be a bullish day. So if today is a bullish day on the stock market, it's going to be bearish for the dollar, for the most part. Because like if we think about it logically, money from the dollar is going into assets. That's why these assets are going to be increasing in price. So where are we at now? Looks like we did get a pullback. We're actively pulling back. I like it. I like it. I like it. I like it. I like it a lot. I like it a lot. You see, greed comes into play when I think that I can trade this on the way down. It's like, why are you doing that, bro? Why you doing too much? I don't wanna do that. Even though I have a good feeling that, let me think. What is a way that we could have traded this? Let's do some paper trading, shall we? We were anticipating selling off into the higher time frame structures that we have, or the higher time frame point of interest that we have, right? But how exactly could we sell this? It's really not that clear cut. The only thing I'm seeing is, okay, we have some low resistance highs and pre-market, and as soon as we get the open, we sell off for a little bit, but then we come right back up and trade into that pre-market low resistance highs. And then from there, it's all about making a pattern. So as you see from there, it's all about this triangle pattern until we get the break lower. So, this, if you wanted to trade this, it would be a very risky trade. But essentially, you would have a sell order at this liquidity here, maybe at the psychological level, but you probably wouldn't be filled if you did 280. You probably would not have been filled. So let's just say you actually managed to snipe this position, then your stop loss is going to be about, I would put it right above either this high or that high between here. I think this would probably be a safer one. But then it's about like, where can you target? So it's like, if you actually manage to catch this off the first minute, you're seeing like 40 points in positive territory. So you think you're good, but then you notice this pattern, right? And so depending on if you just hold the trade or not, you can get, let's see, how much was this? About 80 points or 100 points. That's actually enough for a trade, actually. Everybody's going to have their different strategies, but I was actually talking with someone yesterday about profit targets. And I think that when it comes to me, 80 to 100 points on NAS is kind of a very good benchmark, very good benchmark to take profits at. All right, let me zoom out here. So I want to see if we can get into here, or at least maybe the 1 hour EMA, or we're already below that. Okay, we're already below that. And so the reason I'm going to be paying most attention to NAS is because, again, on the daily time frame, according to our relative strength analysis, NAS is the most bullish. NAS is the most bullish. So if you, again, just see on the daily chart, it swept this low, but it didn't go as low as Friday's low, but Dow Jones did. And you see it's kind of just trading in the area that it was around Friday. But for S&P, we're higher than that, and also for the NASDAQ, we're higher than that. So I just want to see if we're going to get a pullback into here to position ourselves for some buys. And if we don't, we don't. But another thing I want to point out is another reason why we are bullish is because, so not only did we get, from a fundamental perspective, we had very good news yesterday, which is the CPI data release. And again, the reason why that's the good news for the market is because when we see our year-over-year number for inflation coming back down into where we actually want it to go, like target rates, because the Fed wants to get it to 2%. The Fed wants to get CPI to, or the inflation to 2%. So when we see that previous was 2.9, now it came down to 2.5, they're like, all right, that's great news. But let's talk about it from a fundamental, technical perspective, right? From a technical perspective, if you're just looking at this daily chart, it's easy to see this is an engulfing candle. You see, we took out the previous candle's low, and we closed above the previous candle. That is the definition of an engulfing candle. And whenever we have an engulfing candle, that shows you big buyers are stepping into the market, more bigger players are stepping in, and we kind of just like ignored that yesterday's price action to make this more relevant, more significant price action. So again, it's the same thing on S&P and US 30. Very much an engulfing candle, even for 2 days. Oh no, not this one, not this Monday candle, but Tuesday, he just took out yesterday's low, closed much higher. Same thing with the Dow Jones. Actually, with the Dow Jones, we actually didn't close higher than the yesterday's candle, and so that's another reason why or another way that the Dow is not as strong as everything else, and it's actually playing out. We're actually seeing that play out in real time. We're actually seeing the Dow go down faster than the S&P and the Nasdaq. So that is essentially how relative strength analysis works. You really want to use it to be in line with the strongest and the weakest asset. And if you have a bias, you want to trade things within that bias. So our bias is bullish for now. So I want to be looking for buy positions on the NAS, right? But I have to wait. I have to wait because I'm expecting a pullback. So now here's where we can get really into the nitty gritty, right? So we established that Dow Jones is the weakest asset. Maybe this is what you can use to find a sell position off after the open. So let's see how we could have done that. So again, it's the similar pattern with S&P on the pre-market. We got the 8:30 news. It brought us right back down into, and I want you to pay attention to how there are actually wicks in this area. So if we just cut off all of this, you can see how there's actually just wicks in that area. You see, the market does not actually want to be above here very well and stay there for very long. And see, when it tested again, see, it tested it so fast, we didn't even want to stay up there, right? So that is another indicator that we know that, all right, we might be selling now. So let's dive a little bit deeper. If you were bearish, ideally, I would want to take a trade after the market open. So I wouldn't trade right at 9:30. I'd observe this, and then we didn't actually get a structure shift though. See, the only thing that I'm seeing is if you would take a kind of ballsy entry right here based off of this liquidity sweep. Because again, that's one thing you can really pay attention to, is where you see wicks is where manipulation is. So, and this also falls in line with the fact that we want to sell above market open in bearish conditions. So this satisfies that requirement, and this is also a sweep of liquidity here. So maybe you didn't actually identify that here. Maybe you observed it and paid attention to it a bit late. Because if you were to enter right at this point, that is a very risky entry. Actually, I lied. It's not the most risky, because you can put your stop up here, which is not that bad. But it's like, why else would you trade? Why would you go short here? Unless you're just looking at this sweep of liquidity here, and you're just like, all right, let me go short, put a stop up here. That's happened very fast. So the other way you can actually get into this is, even if you observe this manipulation and you observe it breaking lower, you can actually get in on a pullback. This is around 9:40. You can actually get in on a pullback anywhere like on this green candle here, and then adjust your stop however you need it to. I like keeping my stop at around 50 points for US 30, but if you're going to be specific about this trade, maybe you'd want to put it like up here to be really safe. But if you're looking at it how it's playing out, you're already getting a 1 to 3 scenario. So that's how you could have traded this on the way down. Now it's a matter of how low are we actually gonna go, right? So what I would do is, if let's say you did take this position, and let's say like you're actively in this position, honestly, this should be a first target. This 15-minute imbalance here should be a first target, which means if we were in this, we'd want to take our first target here, and then from there, from here, it'll just be about seeing how low we can go again. To which, let's see, if we're actually going to try to do this, I'm not quite sure how low we can go. So this is one of those trades where you just have to take half or take partial, and then you'd hold on to the rest, because there's a good amount of areas that we can actually sell off into. Like we can come back into this area, this imbalance area. We can come deeper into this imbalance area right here. Let me see, 4-hour chart. Yeah, those are two imbalance areas in the 1 hour that are pretty viable. Pretty viable. And you see, this is why these imbalance areas can be targets as well, because imbalances act as magnets. So you see, look at price reacting off of it immediately. So now this could be a short-term low. This could be a short-term low for me, but we don't know yet. The candle has to close in about another like 12 minutes, depending on how it closes. If it closes with the wick in this area, or if it closes with the wick right here, and then maybe we get another wick, a lower wick on that area, that is an imbalance being filled, and that is how we know that we're reversing from here. But this is all about price action analysis, so we actually have to wait until we get the candle close. Have to wait till we get the candle close. So let's look at the other indexes now. So okay, we're seeing that S&P is reacting off of its 4-hour imbalance. Wait, what is this huge zone here? Oh, yes, this is a weekly imbalance. Huge weekly imbalance. Right. So actually, the reason why I have this here, this is actually very important. The reason why I have this here is because depending on how this week closes, it'll tell me, it'll give me the hint for next week's and future price action. Because if we close outside of the zone, which looks like how we're going to do now, if we close higher, that means we're bullish. Because just following the context of the structure, when we came down and formed this huge wick, and then we rallied for a little bit, we created this imbalance towards the upside. So last week's candle selling into it was just like the retest, and it's just a way for, you know, bigger players to like get in on a pullback kind of thing. It's actually interesting that we didn't actually hit 50% yet, though. Interesting how we didn't hit 50% on this Fibonacci retracement. I thought we would have hit it by now. But essentially, I want to see how this closes. This week's candle closes. Because so now, peep the other scenario. If we actually, so let's say we don't close above here. Let's say we close in the zone. That is going to be like a signal that we may stay in this zone for a little bit, or we may trade a little bit lower. Because if this last week's candle was just a pullback. If it's just a pullback, that means there should be even more bullishness to be had in the following week. Which means, or which shows us that if we do get that, say we get a huge push, that gives us context for in the coming weeks for this candle here, and that will give us our pullback, or that can be our setup candle. So basically something that we can pull back into, and then use that area as a catalyst to go even higher, which, you know, I can't even draw the lines up there because we're already at all-time highs. So that is the analysis on that. Now let's go back to intraday. So I had to remember what that this huge box was for. And then we have other areas within the box that we can pay attention to, like this weekly or the daily institutional candle. But we have to see how much, what is it willing to do. So all right, I know that 10 o'clock is usually an expansion hour. Look at this divergence. This is interesting. I know 10 o'clock usually expands. But are we going to be expanding to the downside or expanding to the upside? I notice this is an institutional candle here that the market is kind of reacting on the S&P. So when it comes to actually trying to find a position, I don't mind if we're gonna buy. I don't mind also buying S&P. Depending now, it gets into like what is gonna give me the best price action. What's gonna give me the best price action for my trade? All right, I'm gonna be right back. I'm gonna be right back. What is this? All right, we're back. We're back. We're back. So Let's see what happened. It's actually getting kind of chilly in here. Let me turn off the AC. All right. All right, this is interesting. All right, this is interesting. We're getting a reaction off of this imbalance here. But to be honest, I think we need to see, like, this is not enough. It needs to start breaking structure to the upside. So again, I'll be willing to take a position on S&P or Nasdaq when it comes to buying. I don't think I want to buy Dow Jones. How's gold trading? Yeah, we should have held that gold, man. Should have held it. I guess right for a few, I'll talk about my challenge. So right now, I'm in another phase 2 challenge of a 50K demo account. Um, the goal for this is to get, I think I need 2 more profitable days, which means I have to make 250 in a day to I have to like make that let that carry over into the next day, and I have to get the balance to 52,500, which is an 8%, sorry, 5% gain. So if I'm able to achieve those two objectives, um, I'll be able to get funded. I'll be funded with 50K. So I technically have the profitable day like average, but it's not gonna carry over unless the day actually ends and I'm in profit. So I probably will take another trade though before the day's over. So and we don't know the outcome of that trade. So it could be anything that happens. But we could have definitely held on to gold. But all right. Oh, whoa, whoa, whoa. That was fast. Hold on. Oh no, we're getting removing already? Yeah, see, this is how 10 o'clock is used for expansion. All right, here's what I'll do. Maybe we'll get a pullback. Let me prepare. Wait, let me prepare. US Tech. We might not get a pullback though. All right, let's see. This is exactly what I was looking for. I said we needed to start breaking structure to the upside, and that's happening. That is happening. Um, very interesting. Yeah, so you see, this is why you'd only take that first target. So let's say we did take this trade on the sell side. Now we'd be giving money back to the market. You know, that's why it's good to have multiple targets. I've realized over the years that you really need to have just multiple targets because stuff like this can happen to you at any time. Like you would think that you found such a good trade on the sell side, and then lo and behold, 8 minutes later, the market's coming back and taking back 140 points from you. You know? All right. Let me see. I want to get ready to take a position. All right. So if we're observing sweep liquidity here, V-shaped recovery, can we at least hit the EMA? So the imbalance I'm looking at now is this one here. Can we at least get to the EMA? Can we at least get to the EMA and form some type of pattern here? Because then let's see, let's paint out a scenario. Let's say I get it at the EMA at around 270, 275. My stop loss, if I put it at 35, that's 40 points. But I really would want to put it like down here. But that's deep. That is deep. No pullback, man. See, this is where we're gonna need patience. This is where we're gonna need patience. This is where we're gonna need patience. And this is where I'll also run into various other issues in my trading in previous years because I would have everything mapped out to how I want to play it, and then you miss one little thing, or like if you forget one little thing, and then it's over. So now it's either we chase this or we just don't trade at all. And so I think that it's best if I just don't trade at all, or at least just wait until the market gives me what I'm looking for. Yeah. Wow, we're really expanding now. If we entered, let me think this. Let me think. If we entered on this volume imbalance, that's it. That's the entry. This little pullback here. But if I did that, my stop loss would be tight. I'd only make it at like 30 points or something. Let's see. Gold is pulling back. The only thing maybe that can help us out is if 1030 we get a retracement, but it's definitely expanding right now. That's a little bit frustrating. All right, here's what we'll do. Send alert. Send alert. If we get below this low, because that's the EMA I was looking for. That was the move to the EMA on the 1 minute that I was looking for. It's like, bro, if we just hit the EMA, I would have entered. I promise. I promise I would have entered if we just hit the EMA. But all right, it's okay. It's okay. So I really anticipated a deeper pullback. We weren't really gonna go that low. All right, we have to see what's gonna happen in a few. All right, let me take a look at the yens real quick, or at least GJ, because GJ, or really the yens, is something that it does fall or trade very similarly to the indexes, but not quite exactly the same. So if we look at this month, this week here, September 2nd, on last week basically, we had a huge sell off, and that's similar to the indexes. Last week we got a huge sell off, and the reason for that, from a fundamental perspective, why the yens trade very similarly to the U.S. equities, is because Japan is the number one buyer of our treasuries and bonds. So they own, like, we owe Japan like so much money because of the fact that they own those treasuries. And so their economy is going to be based off of, it's going to move based off of how our economy moves. So that's essentially why their currency, I'm sorry, that's what I meant to say. Their currency is going to move similarly to how our economy moves. So if we just look at the yen itself, where is it at? you know, so when we have outflows from US equities, they're going to have inflows into the yen, you see? And so now going back to GJ, if the Japanese yen is going up, then GJ should be going down because the pairs and correlations and shit. So yeah, that's why we're seeing what we're seeing here. I want to see though, because this has been exponentially weak this month or this week. So you see, we got the start of this week on Monday here, and we've actually just been trading lower, whereas equities have not. So it's not exactly a 1-to-1 ratio. So don't get what I'm trying to say confused. But you can definitely use it as part of your analysis. Um, but yeah, I wonder why on a fundamental perspective why we're weaker here, because I would think that we should be getting some bullishness, especially with how bullish the stock market's been, especially yesterday. So something like this tells me that we could potentially be in a reversal area though. We have liquidity in the form of these lows, and then oh my gosh, and then we took that forming our fractal low here. So I wonder if now we're gonna start breaking to the upside. I'm not willing to bet on it though, but I am just curious because we have another day's price action worth on Friday. And is there any other news we have to worry about? The European Central Bank did their press conference already, so all of that was this morning. So we have a lot of catalysts for price action today. We actually have a lot of catalysts for price action today. All right, what's going on? See, 10 o'clock. 10 o'clock moves. 10 o'clock is prime for expansion. So it's actually interesting. I remember that liquidity that we pointed out back here. The market was doing exactly that and using that as the catalyst to move higher. So we have this short-term liquidity in the form of this trend line here, along with the imbalance. So we see the market came down, filled that imbalance. It actually didn't fill it all the way, but nevertheless filled it. And we're getting our movement now. But there's a lot of so we're just about no, we did breach the highs. We did take out these highs. So okay, I want to see how we're gonna respond now. I want to see how we're gonna respond. It's like, are we gonna leave a wick up here, and then if we do leave a wick up here, I'm more inclined to wait for my entry down here. But if we close above it, well, to be honest, either scenario can happen. Even if we close above here, we can probably still get a pullback down in here. But I think closing within here, depending on how we close, we can most likely definitely get that pullback into this area, and I'll be able to get my fill. Gold is pulling back now. Not bad, not bad. And then crypto, I feel like there's not much that's been on crypto. As you see, they're just trading along with equities and the stock market. Nothing too crazy special on crypto. But actually, this week, if you were buying this week, yeah, like on Sunday, it looks like it's a pretty nice position if you just held that into the week. But I'm not a swing trader. Every single time I try to swing trade, I get clapped. Like I don't like it. Um, Okay. Anything on this my stock watch list? Oh yeah, I think GME had earnings this week. Can this turn off? I think GME had earnings this week. I'm not an investor or trader of GameStop at all, but I do find it interesting to look at this stuff because think what is it back in 2021 where it had its huge thing with the Roaring Kitty. I was gonna say they did it again. So yeah, it was back here in 2021. Yeah, but they actually ran it up again. So in this year, so that's very interesting. Very interesting to watch and follow along with. But as far as their earnings, what was the number? So they beat on actual earnings. So okay, interesting. People expected them to be unprofitable, but they were slightly profitable, like at the bare minimum profitable. And so revenue though is shit. So estimate was 895 million, but they reported 798 million. So it's like the company itself is not really the business itself is not really generating revenue and profit like that. So when you're looking at the fundamentals of it, it's really not something worth investing into or trading. So which is why I say, I'm not going to touch it. I'm not going to touch it. But again, it is interesting to see how people are willing to gamble their life away. Um, Going back to Nasdaq, so we're not going to get a pullback to this EMA. Anything could still happen though, realistically. And it looks like we're more willing to close above this line here. Okay. Hmm. What's the 5 minute telling us? Oh, we're getting a fractal. So I think I'm going to pay most attention to this 5 minute chart. I think I'm going to pay most attention to this 5 minute chart. So here we have a volume imbalance showing a highly sensitive area. You know, there's nothing but just wicks in this area. So like you see the market wicked, forming wicks, broke above it, wicked right back down into it, came back up during the news, filled it, broke down even more, and then now we finally got a huge push through this area. So something tells me that if we are able to get back into here, that'll be a very nice area to take longs, take buys. But we have to touch this EMA. We have to touch it. So I'm just going to be patient on it. But I was saying it looks like a fractal could be forming in the sense that this could be our short-term highs, which it could make sense too because this remember this line was liquidity on up here back during pre-London. So see, yeah. So back during pre-London, we made a high here, and market just took that. But it's actually I wonder what's gonna happen because I want to buy in here. That's what I need. Like I would just love if I could take a buy position in here. With the right context, of course. Because if we get down, if when and if we start trading down lower, if we just go aggressively down and start printing aggressive down candles, I don't think I would want to buy in this area, you know? But based off what we have right now, I wouldn't mind taking a position in here. But we do have to have the right context. And this is the reason why I don't mind. I'm always switching through the different time frames because I want to have things aligned as best as I see fit before I take my position. So let's see what the other indexes are doing right now. So yep, we got a clean V-shaped recovery on everything. See, I also wouldn't mind taking longs on S&P as well, but it looks like it's less likely because we would have to get back into this area as well. We have to get back into this area as well. See, we love V-shaped recoveries. We love V's. V's my like favorite fucking letter. Um, US 30. Okay, so this looks like it's actually bouncing off of the EMA, but it's like I don't want to trade the weakest asset. And we can also see it here. The percent change is the most on NASDAQ rather than on US 30. It actually has a negative percent change because this is the only one that's still underneath open price. So you see this is also above open price, above open price. So when I'm looking for bulls and looking for bulls, I never went bull hunting, but when I'm looking for longs, I want to get it ideally on the indexes. Let me be specific. When I'm looking for longs on the indexes, I ideally want to get longs below open price. You know, that is just like the secret sauce. Like I'm giving you my secret sauce. So that is essentially what I'm waiting for. But we're not getting that right now. So maybe there might be some type of pullback later on in the day. I would just have to see. But the market does not look like it wants to work with me right now. It's like I'm telling you guys, if it touched this EMA back here, if it literally just just kissed it, I wouldn't mind taking a position. And so let's see if we got that. That would have been about, as of right now, about 60-ish points. I think I would have held it longer, to be honest. But you see now it's hugging the EMA. Do I want to take a risky trade? I don't want to. Hmm. It looks clean, but so there's this. Here's what I'm thinking about. So I'm thinking about. I can buy it now, keep the stop loss tight, or I can wait for a pullback. All right, it's breaking out. We're buying it. I usually don't buy breakouts, but today is an exception. So we're gonna keep stop loss tight though. We're gonna keep stop loss around 1297, 297. I usually risk, what is it, 19,297. I was gonna say I risk about a little bit over 0.5%. Never 1% risk though. I never do 1% risk, which would be 500. So I think I want to do this 297 because we were bouncing off of this EMA. Like we were literally hugging it. So you see, that's kind of what gave me this pattern here. It's kind of just like gave me like, all right, we might be able to move now. So yeah, I'm gonna keep the stop loss tight and keep it right there. And keep it tight. So yeah, 290. Yeah, let's keep it an even number, 295. Just below 500 risk. All right, now where am I taking this to? Here's the problem. We recently breached this previous high, so now we have to go to higher time frames. Looks like we're pulling back now too. I got caught. I got caught in the trap. I was gonna say it looks like we can expand, but I got caught in the trap. Wow. 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 Um, just like that. Just like that. No patience, man. I love that. Just the when I decide to enter after a couple of like a good hour of watching price action, that's when we get our freaking pullback, bro. Oh my god. Oh my god, that's so stressful, bro. This is what I was looking for. All right. All right, let me relax. 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 We're going to split it into two positions. I'm going to split it into two positions. I'm going to make a stop loss about right down here at 19,210, 19,205. We're going to split into two positions. I hate myself for not being patient. So, all right, let's take a step back. This is the original area that we were looking for buys in. How are the other indexes responding? Yep, it's doing exactly that. Responding to this imbalance area. I want to wait for the next 5-minute candle. I want to see if it gives us another wick in this area, and I'm going to re-enter again for the second half of the position. But yeah, if we just expand from this area and we don't come lower, we can actually see some really nice expansions to the upside. We can at least see we have the 4-hour imbalance here. Balance. See what kind of price action we get when we get up there. But also zooming in to the 1-hour chart. If we look left a little bit, yep. So we got the imbalance area, and then we got liquidity area at around 500. So that's some areas that we can expect it to go to. All right. I want to wait for the next 5 minutes. Yo, I did not have to lose $400. It's okay. If I can just get another entry, because you see look how fast the response is. Like, this is what we were waiting on. I just find it so funny that the minute before, I was literally in this trade for 2 minutes. Yo, I was in this trade for 2 minutes. I entered the market. The market said, "Give me your fucking money." Oh man. All right, but it'll be okay if we expand from here. It'll be okay. Everything it'll all be worth it if we can expand from here, bro. That is hilarious though. I'm not even gonna lie. That's trading for you guys in a nutshell. Yeah. That's trading in a nutshell. All right. Gotta wait another 20 seconds. I'm gonna get another 0.6 lot entry, but I need to know, like I need to know that we're bouncing off this area. The only way I can do that is based off price action. So if we get like, okay, we got the 5-minute candle now. You see how this looks very weird? If this breaks lower than this, it's over. We're not buying from this area. That's it? That's the pullback? This is the volume imbalance area. Alright, we're doing it. No, no. Alright. is a heavy risk, but this is why we're going to be monitoring it. I'm going to make sure my P&L is not any more than 500 or any more than negative 500. We can't lose more than that in a single position. That's too much. Okay, now we can talk about some targets. Hopefully, the market goes up there because we got the pullback. So we have to get rid of all this stuff. Just looking at pure price action, right? We're just looking at pure price action. This is what we want to see. We have liquidity being generated to the left. We have the sweep of liquidity with this huge candle down here. We have the expansion that leaves behind imbalance right here. And then we have our entry when it comes in and fills in the imbalance. So just from a pure price action perspective, we're seeing what we want to see on this 15-minute chart. We're seeing what we want to see. So yeah, again, just as now it's really just a matter of patience and hoping that it hits our target. But let's see. Let's see where our target can be. So if we're looking at from right here, so like I was saying, I want to go for at least 80 points. So I can take profit on the first one. Today is a bit of an exemption on the profit target because we have a lot of catalysts on news events that was released today that can give us room for more price action. So I want to go for a little bit more than just 80 points. I want to see if we can actually really start breaking structure to the upside and like holding structure and shit like that. So I think that getting to 400 first, or at least even 420, is not a bad target. So that's essentially another 120 points from here. And that's not bad actually for a first target. This would be right here. The numbers are slightly altered on my brokerage. So as you see, we're at 19,316, but on my brokerage are at 19,270, 296. So slightly different numbers, but overall the same thing. You can see the imbalances right here. It's around like 19,410. So I think for this one, that's gonna make my first target that 19,410. That's not bad at all. And then for the next one, if we get lucky enough, we can just go for 19,500. Another 100 points. Which let me think. I really don't even need that much for the thing. So we'll go for 450 instead of trying to be greedy. Go for 450. So 19,410, and then another 40 points after that. I'd really just like to see that the market expand though. So we'll watch price action for another like 10 minutes or so. See what goes on. But let's see. Gold looks like it's turning back around. Yeah, gold looks healthy. I could have pulled so much more, and that would have been better too if I did that because it would be like a buffer. Because to be honest, my main goal for today is just making sure I close with at least $250 profit, and you know, that's easy technically. Like I could just close the trade right now, and we'll hit that. But I also want to see if I'm right. But when it comes to if we start seeing some like pullbacks, some like significant pullbacks, I'm just gonna close the trade. I'll have to just hold that L. Like I'll have to. So I think that basically we shouldn't get back down into here. I think I'm going to adjust my stop loss as well, just so I'm not risking as much. So it's 95 plus 240. See, I'm okay with that risk. I'm okay with that risk. Like in the worst case, if it does hit stop loss. You know what I didn't look at today? The VIX. All right. So let me start actually the daily chart, because this is really the main driver price price action. Excuse me. So again, this is yesterday's candle that led to the big bullishness in the indexes. And so it looks, for now, it looks good. Like it looks like we can just hold the trade for the rest of the day, and it should be expanding because we have this wick. Looks like it filled in some imbalance, and now we're just wanting to get more into the downside. But it's all a matter of patience. All a matter of patience. What is the hourly chart saying? Oh my God, we're moving lower. It would be so much better if I was in this and like I didn't take that loss right before. You see, that's what happens when you try to take trades outside of your plan. Don't be like me, guys. Because now, if this trade comes back and hits stop loss, like that's a double loss for no reason. I don't know, man. The VIX is pointing down. I don't know why. Like, come on, man. Let's get our expansion. We got a gap up, broke to the downside. Oh man, we're not getting favorable price action at all. Wow, US 30 is the bullish one. That is interesting. They flipped it on the intraday basis. They flipped the relative strength. Look at how clean US 30 is moving, and look at Nas. We're still reacting off the area though, but I find that so interesting. Like I've seen it happen before. These things, it does happen where like we identify in higher time frames. Nasdaq is clearly the more bullish one. We did it. You can scroll back, but on an intraday basis, they flipped it. They made it so US 30 and probably S&P. So it's actually interesting. Or the weakest, and now intraday is the strongest. And then S&P is always in the middle between the weakest and the strongest. But it's so interesting to me. So interesting. Regardless, if we can just bounce off of this area, that's enough. And you see, we got below the EMA on the 5 minute. I believe we also got below it on the 15 minute, just to fill in that imbalance. I wish that Nas was trading with the conviction that US 30 is, though. Maybe we're getting some bullishness now. But I mean, as far as structure and price action and smart money concepts, I mean, like it doesn't really get any better than this.
minus the sell, or minus the loss that I took trying to buy it up here. This is exactly what we were looking for. This stuff, this manipulation, you see how it's wicks, nothing but wicks in this area. This shows where we should be entering. So now it's just patience, man. It's just patience. That's the hard part, though. That is the hard part. Gold is expanding. Silver is actually trading with some conviction. Silver is like, we're out of here, man. See, Bitcoin is not really doing shit. If anything, this might be an entry point for like a short-term day trade. But I'm not a trader. Or I'm not a crypto trader. I'm a crypto investor. Yeah, just on an intraday basis. Oh, and also on this 4-hour chart, it looks pretty good. It looks pretty good. Bouncing off the EMA, bouncing off the institutional candle, and then combine that with bouncing off this 15-minute imbalance. It looks good. It looks good to hold, most definitely. All right. What is going on here? And that's another thing, that the way that I analyze price, it is a theory. Theories can be wrong. So, yeah, we can be wrong. And that'll be up to me to determine if it's okay. But I think it's okay, even if we're wrong, because we adjusted our stop loss to, we brought it up a little bit more, so we're not risking as much. So I think we're risking total like, so it's 95 plus 290, which is like 380, which is in line with what I want to risk. That's like my comfortable risk. Like as a trader, you have to determine that, like, because there are different like ways that you can maximize or minimize your risk. Like if we wanted a wider stop loss, or if I wanted to keep my original stop loss where it was, which I think is like down here, we could do that, but I would have to lower the lot sizes. I would literally have to, because if not, I would be risking more than 1%. And I do not want to. You don't need to risk more than 1% on a trade. When you're dealing with the decent account size, you really don't have to risk more than 1%. Um, like in no scenario should you ever have to risk more than 1%. So the trading game is all about longevity. So it's like, even if I believe today we found a very good trade, but like even if it turns out to be wrong, my risks allows me to trade another day. My risk allows me to live for another day, which is really all that's important. That's the most important thing when it comes to this trading game. Like, you want to be in the game longer than you're not in the game, you know? Because the market can whip you out. Because, like, let's take a look at this real time example. I was in this trade for 2 minutes. I entered at 10:33. I exited at 10:35. 2 minutes. I lost $400. So we have to control our risk. We have to. And like that was basically almost a 1% risk. That was almost a 1% loss. Like, you know, think about that. Put that into perspective. Like, you have it could be any account size. It doesn't even have to be 50K. What if it's a 100K account? If it was a 100K account, you lost basically 1% in 2 minutes. That's fucking crazy. That's fucking crazy, right? So, yeah, man. Now, the only thing, all right, so it looks like we're getting some favorable price action. Looks like we're getting some favorable price action. So, the only thing that I would need, or the next thing I need to determine is, let's make sure we're still going here. But the next thing I need to determine is where my break even point is. And just based off the price action, I think I want to put it in between these two positions here. I think I want to put it around like maybe 260, 260, 270, because no matter where I put it below here, it's going to be a loss on this position. But I want to have it enough to cover to where it's an actual, like truly a break even trade. But I don't want to do it yet because we have to break structure. We have to break structure to the upside to show me a willingness to trade even higher for the rest of the day. And then if it does that, then we can break even, and then we don't have to watch the charts anymore. I guess we'll watch the 11 o'clock close. We'll watch. Whoa! Please come back up with that same conviction. Please come back up with that same conviction. No way. Or was this the setup for the sell off? Where we have a mitigation, where we have the high. Let me show you the mitigation real quick. High, low, higher high, dump, pull back into some significant point of interest, and then continue. I really hope that is not happening. No way. We have very nice structure right now. Maybe it was just a pullback to go higher. Please be that. And this is why I didn't want to break even yet. Oh no. All right, we're still in this. We're not. We're still in this. Easier. Yeah, that would have made my life so much like more simple and less stressful if I just traded gold today. No, this is not good, bro. This is not good. Maybe I need to calm down. It's still the structure is still no, oh man. Wow. Um wow. What's going on? Trading view froze. It was a mitigation. So if it, let me think about this from a macro perspective. We're gonna be selling off then. Wow. Welp. That's it. I think those are just my trades for the day. Um, well, that's interesting. I think that this is interesting. I don't see us trading higher anymore than from a technical perspective. Look at that close. I don't think we're gonna come back up here. I don't think we're gonna come back up there. Wow. All right. It is what it is. I think I'm done for the morning session. It's a little upsetting. I'm not gonna lie. I think I'm done with the morning session. I'm gonna come back um for market close. I usually trade close, or at least I just watch price action on close. If any good trade comes in, then I'll take it. But yeah, if I was liquidity, I'm going to be upset. I'm not even gonna lie. Like if my stop loss that right here was liquidity, and we're just gonna trade higher, I'm gonna be upset. But I don't think that that scenario is playing out because we actually have a bullish VIX. We actually have a bullish VIX. And if the VIX is willing to trade higher, that's selling pressure on the indexes. Damn, bro. I don't. There's no position though. If anything, it's probably a sell position, but I'm not gonna take it based off of the mitigation. So again, we have high, low, higher, high, break, pull back to significant point of interest, expansion, continuation, and then I think from there you might just be doing that. That's what makes the most sense to me, at least. Um, if if the market could do anything, that's the thing. But if it does just trade higher, I'm gonna be a little salty, just a little salty. But all right, guys, it's 11 o'clock. I think I'm gonna shut it down for now. Um, screw the market. Yeah. All right, peace out, guys.